Hi, this is Zach Meir with the cryptocurrencies review. Not so much crypto mania at the moment, crypto woes, I think, for some people. Also seeing quite a few commentators with the I told you so type of comment as well, which is not very friendly. But looking at the chart of Bitcoin, just to start off with, you can see that even though we had that shakeout down to, what was it, to around 42,000 yesterday, the market is still actually within a rising trend channel from back in May. So if we hold that particular area, 41, 42,000, then we're still basically holding on to the uptrend from earlier in the year, and still normally in a buy on the dip type mode if you've got the nerves to hold on to that kind of position. The other point to note is that the 200-day moving average, the black line there at 46,000, still rising. So normally a dip into a rising 200-day moving average is a dip to buy into. Even the one that we had in May, which overshot obviously by quite some margin, actually then dragged the market higher. So the potential is that we'll see the same thing again. I suppose the obvious thing to say now, though, is if we're sub 40,000, that would rather kill the idea of buying the dip. In terms of the upside, the last support on the way down around 53,000, so that would be the initial target. It is actually quite interesting that we're way above, already way above the intraday lows of yesterday, so that is a pretty positive sign for this market, despite what the doomsters say. On to Binance, and here we had the look with yesterday's price action of a potential falling wedge breakdown, but actually we're holding up very near to that line, and an end of day close, I suppose, through $590, $600 could actually just resume the slow build that we've had for this market since May. While we hold above the $500 area, still on track for a May resistance line projection target as high as 700, maybe over the next month or so. Obviously quite a punchy call, but we've so far had a failed rising wedge break, so looks relatively stable. Moving on to Ethereum, which again had that much more of a bear trap here below recent 4,000 support, so that's a better indication that we're still in a rising trend channel. Might not want to be so optimistic as the line I've drawn previously, but maybe let's say the price channel that we're in is up to is in that configuration. That's heading towards 5,700, and while we hold yesterday's lows, that could still be the destination with this market. If you're cautious, maybe wait for an end of day close through the November resistance line at 4,700 as a momentum trigger. But Ethereum giving the game away, that we've just seen a sort of shakeout rather than the end of the line. On to Cardano, which was looking bleak before the sell-off this week and is now looking just as bleak now. I suppose the fig leaf in terms of support here for this market is that February uptrend line. That's around $1.30. While we hold above that, this is a dip area to buy into, $1.30 at that February line. We've got that falling trend channel as well, but above 130 could at least retest this month's resistance through $1.70 over the next month or so. On to Dogecoin, which was also looking pretty sad before the breakdown. We've had, I suppose, a bear trap through recent support, so below the 0.16 area, the low yesterday, down towards 0.12, so a pretty tough breakdown there, and the RSI getting very oversold as well. Looks as though we're sort of getting back into the old 0.15, 0.25 range for Dogecoin at the moment, even though that falling 200-day moving average, the black line there at 0.25, is going to pressure this market and perhaps take it back down towards the 0.1, 0.12 area at some point in the near future. On to Ripple, which again had a total clear out and a clean out there, down to 60 cents or sub 60 cents at worst. The main thing, though, here is that uptrend line from back in January. That's at 0.75. 75 cents, and above that we've got the possibility of it pushing back towards 0.95 as a best case scenario. The reason for the optimism, I suppose, is that we really pulled away from that intraday low yesterday very, very sharply. The negative, though, is the way that we've got that falling 200-day line. So that's probably going to make sure that 0.95 is the best on the upside in the near term. Moving on to Solana, which has been a near-term favorite of mine. Even here, there was the bear trap below previous November support, so around the 180 area. But while 180, got the possibility of bouncing back towards that November resistance line at 230, and still open to the top of September price channel target as high as 275, maybe over the next 1 to 2 months. Finishing off with three cryptos, which are, I suppose, the sort of the flavors of the month, the flavors of the moment. First is Luna, which looks to be the star of the show by quite some margin. Here we had that sort of rug pull yesterday, recovered very well from that, and now near the highs. In fact, we made a new intraday high briefly. Looks like we're in a rising trend channel from the, well, I suppose the spring, heading towards the $100 area. And it would be surprising now if we didn't hit that zone maybe over the next 2 to 4 weeks, especially while we hold above the $65 area, which was resistance prior to the rug pull yesterday. Not so handy for Filecoin at the moment, which seems to be suffering with the falling 200-day moving average, which has been falling since the early part of October. That's pressuring the price action. Does suggest that actually, even though we pulled back from yesterday's low, around $32, we could still risk a move down to the $20 area at that August support line projection. And that might be seen over the next month or so. The saving grace at the moment is the way the RSI is very oversold under 30, but with that 200-day line pressuring it, it's looking pretty tough in terms of a recovery argument. Best case on the upside, I suppose, at the moment would be back to the $50 area, which was support on the way down. Well, the support previous to the decline that we saw yesterday. Finishing off with Shiba, which is at something of a crossroads. The crossroads areas for this market is somewhere around so we'll call it the 32 area. That was the initial resistance for this market in early October. But if we can hold that uptrend line from October around the 0.3 area, let's call it, there's many zeros there, but the 30 area, then we should actually head higher and go back to this 50 zone, which has been recent November resistance for this market. So just about holding on for Shiba at the moment. That's it for me today. More updates when necessary.